Hi,
Hello, good afternoon,
good afternoon, Funke.
and welcome to our seventh webinar. Welcome to our webinar today. Here with me, I have my colleague. His name is Mustafa Mohammed. I will start by introducing myself. My name is Olufunke Taiwo. I am a HR professional with a couple of years experience. Together with my good colleague, Mustafa Mohammed today, we'll be talking to you about how to be more financially responsible. I'll leave Mustafa to give us more details on what the talking points for today will be. But firstly, I would just like to tell you a little bit about Mustafa Mohammed. Mustafa Mohammed is a qualified accountant with at least 8 years experience. He is currently the lead consult for the company called Financial Recovery Consulting. He has consulted for a number of organizations, Pivotage Consulting being one of them. Another one is Banana Island School, also Lehman Professionals. and a couple of other organizations. He will be taking us through the webinar on financial literacy today. What this means is how we can be better behave when it comes to our finances. So let us welcome the speaker to the floor. Mustafa, thank you for having us today. Please go ahead.
Thank you, Funke, for having me on the show today. Like you said, today we are trying to look at how you can be financially free, financially independent. And there's no better way to do it than starting now. As we all know, 2020 has been a bit tough for us considering the pandemic, that's COVID-19. So going into 2021, we need to be prepared financially. And how do we do this? Is by being financially literate. So today, we'll be looking at what you need to know about financial literacy, personal finance, basically. So let me share my screen with you, and then we hit the ground running. I hope everyone can see the screen. So financial literacy,
Yes,
what you need to know on personal finance by Financial Recovery Consulting. So quotable quotes, only 20% of a person's success is determined by their degree, while the remaining 80 depends on soft skills. When we say soft skills, we're referring to time management, creativity, we are referring to analysis and financial literacy. So what we will be looking at today is financial literacy, one of those skills that as a person you need to have to be able to be successful. And what kind of success comes out from financial literacy? It is being financially free. Let's take a look at the next slide is the content of what we'll be discussing today. We have an introduction. What is financial literacy? Financial literacy across the world. That is what statistically, what is financial literacy like? How well are people practicing financial literacy? Setting financial goals. What is a budget? Savings, borrowing and investing, responsible financial behavior. Yes, you need to have some level of financial behavior that will make you to be financially free. 5 principles of money management, how to understand your paycheck. Yes, you also need to understand your paycheck. You also need to know your various sources of income, what you earn. What do you do from here? So after all has been said, what is the next thing you need to do? Questions. So let's move to introduction. Low financial literacy level and poor financial education are the root cause of financial problems faced by many. Financial literacy matters on many levels. It is not only help people manage their financial affairs and improve their standard of living, but also makes an important contribution to the soundness and efficiency of the financial system and to the performance of the economy in general. Yes, we most of the time, some people don't understand the idea behind savings and savings. When you earn, there's a certain portion that you take to the bank and then you call it savings. Fine, you feel you're saving your income, but on the other hand, also you're also empowering or giving your money to the private sector. So how does your money get to the hands of the private sector? It is through the bank. The bank loans your money to the private sector. By so doing, it helps the economy to grow. And that is why we said the performance of the economy in general. Also, this training is an education on basic concepts of financial literacy to make better and more informed decisions when it comes to saving and borrowing money. Yes, It's when we say basic concepts, we're just trying to look at the surface now, and that is basically savings, borrowing, and investing before you move to other areas of financial illiteracy. But for now, it is basically about saving, about borrowing, and about investing. Despite being a relatively new field of study, financial literacy has become increasingly important for government and citizens. Without it, there can be broad implications for the economic health and stability of countries. Yes, like I mentioned earlier on, I can remember I read a book by Dr. Ola Brown. Dr. Ola Brown, the name of the book is Economy, Banking, and Finance in Emerging Markets. When we say emerging markets, we are referring to mostly African countries where it seems development is still at a very, very low level. So in emerging markets, we tend to have the banked system, while in the developed markets or developed country, we tend to have the market system. So what differentiates or what's the difference between the bank system and then the market system? The bank system is basically a situation whereby the citizens take their money to the bank and then they save it, and that is the end. They never think of, oh, let's invest part of it. And when you invest part of it, it kind of improves the health and stability of the country. And that is what the advanced countries do. When the citizens don't take their money to the bank, what do? They take their money to the market system. What makes up the market system? That is the stock exchange. They buy equity, they buy shares. So when you buy shares of companies on the stock exchange, what are you doing? You are helping to provide funds for these companies to grow. And when they grow, it creates economic health and stability in the country. Unlike here in Africa, where we operate, like I said, bank system. The bank system basically is about the citizen taking their money to the bank in the form of savings and not doing anything about it again. So financial illiteracy also helps, or the implication of financial illiteracy to the country is to guarantee good economic health and stability of the country. So now let's look at what is financial literacy. Essentially, financial literacy is the ability to use one's knowledge and skills to effectively manage financial resources, ideally for a lifetime of financial well-being. Don't forget, when we started, we looked at our quotable quotes where the University of Michigan carried out a study and said, for you to be successful in life, I'm paraphrasing now, it takes more of your skills and then less of your knowledge. So, and here we said financial literacy is the ability to use one's knowledge and skills to effectively manage financial resources, ideally for a lifetime of financial well-being. Let's look at financial literacy across the world statistically. A quick look at financial literacy across the world shows that in Africa, the percentage of adults who are financially literate is between 20% to 50%. Botswana 50%, Nigeria 26%, and Somalia 15%. This was a study carried out by Financial Literacy Excellence Center. Yes, Global Financial Literacy Excellence Center. And if you look at the statistics coming to Nigeria, just 26% of the total population of adults are financially literate. So that's to tell you that there is a problem. The CBN and other financial institutions need to do more as to educating the people on how to manage their finances. Let's now look at the other parts of the world, that's advanced countries. We have Denmark 70%, Israel 68%, Germany 66%, Norway 71%, Sweden 71%, UK 67%, Netherlands 66%. So it tells us that there's a huge gap between the level of financial illiteracy in advanced country compared to emerging world, that is Africa now. So let's look at how do we become financially free. First of all, what do you need to do? You need to set financial goals. What do I want to achieve? Because if you don't have a goal, there's no way you will manage your financial resources, because we need to be honest with ourselves. One of those challenges to achieving our goals is the scarcity of our resources, and one of such is finance. So you need for you to be able to be financially free, you need to set a goal. So a goal is a target, what you intend to achieve within a specific period of time. A goal can be a short-term goal, a mid-term goal, or a long-term goal. A short-term goal it could be under a year. Probably you want to pay off your credits, your medical bill, or create an emergency fund. We will see look at how to create emergency fund in the course of this webinar. Then we have the midterm goal. The midterm goal is between 1 to 5 years. E.g., you want to pay off car loan, just something that takes time to fund now. So those are goals that fall within the midterm goals. Then we also have the long term. The long term can be more than 5 years. It can be 10, 15, 20 years, like buy a house, pay off student loans, etc. So, like I said, for you to be financially free, where to start from is to have a goal. What do you want to achieve? What do you intend to achieve? By so doing, you'll be able to know how to plan your scarce resource, which is the finance we are talking about now. Also, let's now go to after setting a goal, we need to have a budget, because like we said, our resources are scarce. So for that reason, we need to be able to manage it in a way that it will be sufficient to enable us to achieve our goals. So how do we do this? We need to draw up a budget. And what is a budget? A budget is simply a plan. It's a plan. Okay, I want to buy a car. How do I go about buying this car? Okay, I'm expecting so money from here. I'm expecting so money from here. When I get the money by this time frame or this duration, I should be able to get this car. So you have to plan. So a plan showing expected income and expenditure over a particular period of time. It could be monthly, it could be biannually, or usually a year. So what are the benefits of a budget? Let's look at the benefits of a budget. A budget illustrates the need to match income with expenditure. So like I said, the budget enables you to match your income with your expenditure. It allows you to see, okay, this is what is coming in and this is what will be going out. Also, the budget control and manage scarce resources, which I initially mentioned. Resources are very scarce. So how do you achieve your goal? You need to have a budget. You need to plan. Also, a budget is used for decision making. You can also use a budget for decision making when probably you have various goals to achieve. So from your budget, you can see that this won't be able, or you won't be able to do this because your resources are scarce. So based on that, you make the best decision that is better without bias, without sentiment, considering other factors. Also, the budget is also used to communicate. You can also use it to communicate. Probably someone asks you, oh, I thought you earned so. How did you spend it? How did you manage the fund? You can always bring out your budget and show whoever is asking such a question, oh, this is how I was able to expend the income I get or I got. Also, one of the benefits of a budget is performance evaluation. The budget also shows you how well you are performing in terms of managing your financial resources. It allows you to see what you've done and what is left for you to do. Now, let's move to those concepts, like I earlier mentioned, the basic concept of financial literacy, which everyone needs to understand and know to be financially literate. We have saving, borrowing, and investing. When we say saving, we refer saving to be that part of your disposable income. Your disposable income is what is left after all necessary deductions have been made. That is statutory deduction, your tax, your pension, your life assurance, etc. So that's what that portion that is left for you to spend is your disposable income. So from your disposable income, you can also have your savings. So we say savings is part of your disposable income set aside for emergency purpose. Let's look at borrowing. Borrowing, we will still look at each and every one of these concepts, but we just want to have an idea of what they are. So borrowing is external fund raised to finance a project. Probably you have a project that you want to embark on, and you don't have enough. You can borrow from friends, you can borrow from family, banks, creditors. Then investing. Investing is putting your savings into use for future gain or profit. This is the part where most people don't really understand or are a bit skeptical about, which you can't really blame people, because there are so many investment and schemes out there which, if you are not careful, you could get swindle of your hard-earned money. So like I said, we'll be taking a look at each and every one of these concepts. So first on the list is savings. Savings. An individual can choose to save at his or her convenience depending on the size of the disposable income. The rule of thumb for savings is at least 10% of your income. Savings allows you to have an emergency fund which can be used to sort unexpected expenditure. Yeah, so like I earlier mentioned, savings is a part of your disposable income. And normally the rule of thumb for savings is at least 10% of your income. Why I don't forget this part of savings is most of the time I remember when the Christians say they have to contribute 10% of their income to the church as what's it called? Tithes. So 10% of your income, though we know that income can be relative, what Mr. A earns might be different from what Mr. B earns. So, but you can always do 10%. And also, savings allows you to have an emergency fund. Yes, I'm very, very sure a lot of people were caught unawares during the pandemic. So many people didn't have emergency fund, which they never saw the pandemic coming. So they didn't create any emergency fund. So savings allows you to have an emergency fund. It is advisable to have an emergency fund in a case, or should in case a situation like the COVID-19 pandemic happens. So let's look at how to create savings or emergency fund. It's if you want to create savings or emergency fund, you can open a savings account with any bank of your choice, as long as you do your due diligence and necessary findings. Then from your budget, determine monthly expenses and income. Yes, we earlier mentioned our budget, and we said it's a plan. So you compare your expenses and your income. You determine the surplus after subtracting expenses from income. Whatever you have left, you divide the surplus amount by the months in the time frame to determine the amount needed to save each month. For me, I would advise you have a 12 months budget. Why? For you to be able to know where you are going to, for you to know that, okay, oh, this is where I'm going to have a 12 months plan, instead of having 6 months or quarterly budget. It is advisable to have a 12 months and then you focus on it. So for you to determine your savings, you divide that surplus by total number of months you've planned for. By that, you'll be able to create savings or an emergency fund. So now let's look at the importance of savings. The importance of savings cannot be overemphasized. The following are the importance of savings. We mentioned this and we can't mention it enough. Emergency cushion, that is when there's a situation of unforeseen circumstances, it will serve as a cushion for you. For example, the case of COVID-19, also for retirement purpose. Maybe you've gotten to the age of retirement where you are no longer active. Your savings is something that you can fall back on and also use to sustain yourself. Then financial security, you also have for education. Yes, you can probably you want to further your education, you can use your savings. Also, we have volatility of social security. Yes, one of the major or two major social securities that we have are pensions and gratuity. At times, they might not be forthcoming because of lack of fund in the hands of, if probably you've worked with the public sector, in the hands of the government, which at the time were your employers, then you can always fall back on your savings. Let's move to the next slide now. Borrowing. Borrowing is additional fund used in resolving our financial goals. Yes, like I initially mentioned, probably you have a project that you want to invest in, and you have, maybe you need 500,000 and you've been able to get 300,000. Where do you get the 200 from? You need to borrow. So it is additional for used in resolving our financial goals. Terms and conditions are the words or bond agreed by both parties to a loan or credit. Yes, technically, borrowing is referred to loan or credit. So there are always some terms and conditions as to assessing such facilities. You need to understand those two words, terms and conditions. It could be probably you need to give up some certain things before you can assess the whatever you want to borrow, the loan or the credit, or it depends on both parties now. So you need to understand the terms and the conditions that are inherent or that will allow you to have access to such fund. Also, you have interest rates. Yes, interest rate, technically or in finance, we call it cost of capital. Interest rates is the cost of the money being borrowed from another person, e.g., friends, family, banks, creditors, etc. Yes, interest rates is the cost of the money you are being borrowed. No one would borrow you money except from family and friends without asking for something on it. So let's move to investing. Investing, this part of financial literacy has to do with putting your savings into use so you could earn additional income. So we said investing, putting money into a project with the aim of earning something is known as investing. It could be building a house. When you build a house, you are building a house to collect rents, which is income. Start a business. Yes, when you start a business, what do you get from starting a business? To earn income. Start a professional exam. You're writing a professional exam to be able to get a better job. And when you get a better job, it means you earn more. Stocks, bonds, money markets, etc. So basically, you are investing to earn something. You are not just putting your money somewhere and then it doesn't bring anything for you. So investing requires time and risk taking. Yes, we need to hammer on this part because most people don't understand that when you invest, it involves patience, it involves risk taking. And when we say risk, it is the likelihood of wherever or whatever you've invested in to incur a loss or to suffer a loss. So it is an effort that is not casted in stone. You don't really know what the outcome of your investments will be. But with discipline, the expected yield is worth it. Yes. So with discipline, with patience, the expected yield is worth it. That is the gain, the income from the investment is worth it. So let's move to the next slide. Responsible financial behavior. After all has been said about those three concepts of financial literacy, there are some financial behavior you need to have to be financially free. One, follow a budget to limit your spending. Yes, we've mentioned budget in the beginning of our discussion to be a plan that shows our expected income, that is what we expect to earn, expected expenses, what we expect to spend for a particular duration. It could be biannual, it could be monthly, and it could be for a year. So when you have a budget, you follow it to limit your spending. Another financial behavior responsible financial behavior that you're expected to have is save and invest. You can save 5% to 10% of your income, like I said, whichever that is comfortable for you. But the rule of thumb says 10% of our income now. And it is not just only to save, it's to save and invest. Also have credit limits. You shouldn't say because you have from who to borrow, you should be borrowing from everyone. No, have a credit limit. If per month you can borrow 100, let it be 100. If it's annually, let it be so. If it's biannual, let it be so. Have a credit limit. Don't over borrow. It is not good for your health. It is not good financially. So you mind the way you borrow. Have a credit limit. Then build an emergency fund. Yes, you need to build an emergency fund. At times they say you should have an emergency fund of 6 months of your salary. That is what you should have, which I don't know how, but it's possible. It's about discipline. It's about discipline. So let's look at the 5 principles of money management. Yeah, 5 principles of money management. One, earn. Understand your pay and benefits. When you earn, that is, you are being paid, you get income. You need to understand. How do you understand your pay? That is, where, what and what are you entitled to? Probably from maybe from where you work or investments or anywhere that you feel you could get paid. Also, benefits. When you work, there are certain benefits that you're supposed to enjoy. It could be housing benefits, it could be transport benefits, it could be pension benefits. You need to understand all these benefits so as to maximize them, so as to take advantage of them. Also, save and invest, like we initially mentioned under the financial responsible financial behavior. You also save and invest, set goals and start small. Yes, one of the principles of money management is to set goals. We've mentioned this earlier on. Your goal is what you intend to achieve. And I feel everybody who wants to be financially literate, their goal is to be financially free. So set goals and start small. Spend, shop around, and compare prices or products. Take advantage of discount. Yes, while you spend, you can also go around, compare prices of products, services, as well as take advantage of discounts. Don't say, "Oh, it is not possible. They gave me this." Try it out. Compare prices of products and services. Borrow, build credit, but understand interest. Yes, when you are borrowing, you build credit. When you borrow, you pay as and when due. You don't pay and then you don't borrow and then decide not to pay or start giving excuses when it gets to the time to pay. You borrow and then pay as and when due. By so doing, you're building a credit worthiness. Also, you need to understand interest. Yes, you can always ask around what is the interest rate, prevailing in market interest rate before you borrow. This you can do from consulting your friends, or you have a financial advisor. You consult a financial advisor. So you need to understand what you are paying. And like we said initially, we said the interest is the cost. The cost of that money you are borrowing is cost of capital. In finance, they call it cost of capital. What the money you are borrowing, the cost, what the person that is borrowing you is earning from the money he or she is lending you now. So you need to understand interest. Let's move to the next slide. Uh, these are just basic paycheck terms that you need to know as an employee, yes, to understand your paycheck. You have your gross salary. It depends on the company you are working with. Your gross salary is made up of your basic housing, transport, and some other allowances, which will be stated in your letter of employment. When you add everything together, it becomes your gross salary. You have your net salary. Your net salary is you the deduction of pension, your pay, that's pay as you earn, tax, your life assurance, and any other statutory deduction that is expected to be deducted from your salary. You have your net salary. That is your take home. You also have your income tax. Also, your net salary can also be probably it could be owing the company some money, and it's been deducted from your salary. It could be your net salary, but most of the time it's those statutory deductions. As I earlier mentioned, you have your pension, you have your pay, you have your life assurance premium, and then you get your net salary. Then you have your income tax. Yes, your income tax is a pay as you earn, which you pay to the tax authority using the tax table to compute. Then you have your pension. Your pension is a um, future future savings that is deducted from your salary. So it's paid to your pension fund administrator. We have different pension fund administrators that can help you to put your pension into better use and then generate the needed income for you. And then you have access to it after you've retired from service. Other deductions can, like I earlier said, can be probably money you owe to the company, which it depends and it varies now. So what do we do from here after all what we've said and listened to? We said, what do you do from here? We said, practice what you just learned. You need to practice. It goes beyond listening uh, and more of practicing. You need to be disciplined, and you need to follow each and every of what you've learned religiously. Also, attend another training. You also need to attend any other training that you can to be more financially literate. Also, increase your income. Yes, we can't overemphasize on this. If you can increase your income, you increase your income, look for other areas that you can earn from, and then you can do that. Also, take advantage of discount. Yes, you need to take advantage of discounts when you go to shops, or you try to buy one or two things. You take advantage of discounts that are being offered on goods, products, or services. Also, engage an expert or financial advisor. Yes, you can also engage an expert or financial advisor in a situation whereby you seems to not understand some certain things. you engage an expert or financial advisor who can always put you through or advise you on what to do. That will be all on this particular webinar, and I will say thank you.
All right, thank you so
Okay.
much, Mustafa Mohammed, for your time today. It's been a pleasure. Thank you so much for taking us through how we can be more financially responsible. It's been a pleasure, and we look forward to the next seminar. Thank you very much, and goodbye.
Thank you, Funke.